why they went up. And we said in the Trends Journal that they would go up like this if they lowered interest rates 50 basis points. And we also said gold prices will rise and keep rising if they lower them 50 basis points. So as we go on the air, gold is at $2,585 per ounce. Now you go to your top trends for 2024, and it's a golden year for gold. That's right. Gold is up some $550 an ounce since we made that forecast.
In today's news recap, silver price soars above $31 after Fed's bumper rate cut decision. Silver delivers a sharp rally above the crucial resistance of $31. The white metal strengthens as the U.S. dollar surrenders its early gains and declines. The U.S. dollar weakens as the dust settles after the Federal Reserve's monetary policy decision, in which the central bank announced its first ever interest rate cut in more than 4 years. Historically, lower interest rates by the Fed bode well for non-yielding assets, such as silver, as they reduce the opportunity cost of holding an investment in them. The U.S. dollar index, which tracks the greenback's value against 6 major currencies, falls following the Fed 50 basis points interest rate cut. The Fed was widely anticipated to cut interest rates, but traders were divided over potential rate cut size. A bumper interest rate cut by the Fed gives a clear indication that price pressures are on track to return to the bank's target of 2%. For the interest rate guidance, policymakers see the federal fund rate heading to 4.4% by year end, which suggests that there will be at least more decline in interest rates. On the contrary, the CME FedWatch tool shows that the central bank will cut 75 basis points in the remaining monetary policies this year. Silver price strengthens as it has delivered a breakout of the downward sloping trend line plotted from May 20th high of $32.50. The asset is expected to extend its upside towards the previous high. Upward sloping 20-day exponential moving average also suggests that the near-term outlook is upbeat. Now we'll show you the best clips of the latest interview, but first smash the subscribe button, turn on notifications, and check our description for full vid credits. Enjoy the episode.
The headline, Fed goes big with half-point raise. So what is it going to do? Well, credit card balances, small businesses, variable rate loans, but not only the variable rate loans to small businesses, but for those banksters that are going to go bust because they're going to be default on those variable rate loans when the buildings go bust, the office buildings. So yeah, they're going to come down a bit on the variable rate loans on those office buildings, but ain't going to make any difference. And what else do we have? And by the way, most of the street, a lot of the street, we only put the facts in the Trends Journal. On Tuesday, we said that CNBC survey said it was only going to be a 25 basis point drop. We didn't say what it was going to be because it's a guess. So we don't know. We don't make it up. But we did say what would the implications be, and the implications are here. Rate cut caps winning streak for Biden and Harris on prices, but will it matter? This is an article in the, I think it's the New York Times or the Wall Street Journal, one of them. And they go on, it's a very small slice, Josh Evans of the Economic Policy Institute in Washington said, of people who would recognize the kind of symbolic importance of the cut. But again, their credit cards are going to go down, things are going to go down. This is a positive for the Harris administration or the Democrats. What else do we have here? Consumer expectations for the economy improved in August, according to the University of Michigan study, but they still remain low by historical terms and are down from the start of Biden's term. So we've been saying Harris is going to win unless unless there's a financial crisis. Then it goes to Trump. They're going to do everything they can, we said, to keep lowering interest rates before the run-up to the presidential reality show. And that's exactly what they're doing in hopes of boosting the economy a bit so the people vote for Harris. This is from the Wall Street Journal. Rate cuts pave way for overseas central banks. We've been saying this for months. They're going to wait until the Fed cuts rates, and they're all in the same club. They know when the Fed's going to cut it, and they cut it. But the Bank of England didn't cut their rates today, which is, to me, just stupid because the EU economy is an FUCK EU economy, UK economy, rather. It's bad. So they didn't cut them, but a lot of countries are, because they can't cut rates if the U.S. rates are high because their currencies will go down. So the lower U.S. cuts the rates, the more other central banks will cut their rates. And as we said, the higher gold prices will go. We've only been saying this for about a year and a half when rates were at the top. August home sales dropped more than expected as prices set new records. This is CNBC. You ready? The median price of a home in the United States, $416,000. It went up 3.1% from August of last year. We've been saying that despite the high interest rates, it's in your magazine, the Trends Journal. Again, you go to trendsjournal.com, that there won't be a housing slump, even when everybody else was saying it. And then you look at the data. The median price, again, $416,700. There were 1.35 million units for sale at the end of August, according to the data. That's up 0.7% from July and nearly 23% from year on year. But it's still below the 6-month supply on average. So, yes, it's getting bad, but with these interest rates going down, the mortgage rates are going to go down too. Listen to this. Remember I told you what the median price was? Their houses selling in August were up significantly for homes priced above $750,000, but down from anything below $500,000.
In today's news recap, silver rises on hopes of deeper U.S. Fed, rate cutting cycle expectations. Silver prices surged by 1.66%, driven by growing expectations of a deeper U.S. Federal Reserve rate cut cycle, which could start as early as this month. U.S. job openings dropped to a 3.5-year low in July, signaling a cooling labor market, further fueling speculation of an imminent rate cut. According to the CME FedWatch tool, there is a 57% chance of a 25 basis point cut and a 43% chance of a 50 basis point reduction in the upcoming Fed meeting. Additional data revealed that U.S. employers cut almost 76,000 in August 2024, the highest in 5 months, while private businesses added only 99,000 jobs, well below expectations of 145,000. These figures reinforce the view that the U.S. labor market is softening, adding momentum to rate cut speculations. India's silver imports are on track to nearly double this year, driven by demand from the solar panel and electronics industries, along with increased investor interest. India, the world's largest silver consumer, imported tons of silver in the first half of 2024, a significant jump from a year ago. This surge in imports is attributed to stockpiling by industrial buyers to guard against potential price increases. Technically, the silver market is seeing short covering, with open interest down by almost 10%. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
We are at the most critical socioeconomic and geopolitical crisis in the history of the world, part one and part two. But before we get to that, let's talk about what will make everybody happy. Everybody like Vanguard, State Street, BlackRock. Yeah, perfect name from BlackRock. Yeah, they only own 88% of the S&P. The 1% own 54% of all the equities. So good news for them today. Let's see the markets. Dow is up 522 points. S&P 1.7%. NASDAQ 2.51%. Yep. Why? Well, you know why. They lowered interest rates. And what do we say in the Trends Journal? When interest rates, if they go down, it's right there. The magazine came out on, and we've been saying this for months. But could you imagine? So the rich are getting richer, and us plantation workers of slave land here keep getting poorer. And they keep stealing our money in the name of taxes, while the richest don't. Oh, remember all you Trump fans, huh? Oh, you like that tax cut he gave back in 2017 when the 1% got 64% of the benefits? And he bullshitted that they were going to use these tax breaks for capital improvements so we could have more jobs in America. And the next year was the biggest year of stock buybacks ever. Yeah, but we won't talk about that because, hey, I only like what I like. I like Trump. I like Harris. I like Donald Duck. I like Minnie Mouse. You ready for this? First-time home buyers made up just 26% of August sales, the all-time low from November 2021 at the height of the COVID war. So the bigs are buying up all the apartment units. They own the country. Robber barons, USA. And what else do we have here? FanDuel parent buys Italian company. Israel firm and Apollo affiliate in finance venture. Yeah. One after another. One after another. Each week in the Trends Journal, we have bigs getting bigger. Now with interest rates going down, you're going to see the merger and acquisition activity increase. So the bigs are even going to get bigger. Oh, this is interesting. Economy outlook supply worsens. Germany's economic sentiment worsened unexpectedly sharply this month. Another signal of weakness in Europe's largest economy as optimism continues to dwindle. Look at this tiny little article, no facts in there, data, buried in the Wall Street Journal. Buried. Germany's basically in a recession. They say it's Europe's largest economy. They forgot to mention it's the world's third largest economy. And then you look at the world's second largest economy, that's a shithole, China. We don't talk about that, but we talk about it a lot in your Trends Journal. Article after article after article.
What do you think of Celente's predictions? Is he spot on? Do you disagree with him? Post in the comments section your honest opinion and share with the stackers if you're preparing for a major recession in the upcoming months. Now check this video right here and I'll see you on the other side.